I recently came across a very safe way to add income into the portfolio, and we're going to do that through an high interest savings account, but trading as an ETF. We'll be discussing the pros and the cons. We'll also be giving you some names that you can take a look at for further research, and we're gonna save till the end one of the names that looks good for me personally. So let's get right into the video. But if this is your first time here, my name's Nick, and welcome to Ways to Wealth. A huge favor right before we jump in, if you learn something new or you get some value out of the video, make sure to hit that like button. I definitely appreciate that. And with no further ado, let's talk about high interest savings account, but trading as an ETF. So the first thing to point out, one of the pros is with the rising interest rate environment, this is going to do very well for the income side of things. And let's start and talk about what some of the yields you should be expecting when taking a look at these names. So the first ticker here is CSAV. It's a CI financial product, and it trades on the TSX, and the last traded price was around $50. Looking further at it, we can see the MER is about 0.16. This will be relatively the same number that you'll see consistently throughout. And when we look back at the distribution history, we are going to look at this number here, and it pays about 16 cents per share on a monthly basis. So that's about 4% yield. So let's stop right there before we go into anything else. And a 4% dividend yield. I know for myself personally, I have a CI financial high interest savings account that is not publicly traded. That's my own personal savings account, and it's paying 3.6% right now. And the reason that these high interest savings account ETFs are able to get such a high interest rate is because they have a larger pool of capital, and the banks are giving them a higher rate themselves. And obviously one of the cons right off the bat with that is that there is a fee when it comes to the MER. I am paying 0.16 if I do hold this ETF, but if I'm holding it in a registered account, I'm not paying tax on whatever the gain is. So that is becoming essentially interest free or tax free at that point. So another ETF to consider is Cash. It's a Horizons product. CASH.TO is the ticker, and we can see the gross yield here is about 4.78%. MER is roughly 0.16 as well. And obviously when you're looking at this yield, it is a relatively high number. And if you watch my video before, is it time for GICs that we put out quite some time ago, this interest rate is almost comparable to what you're getting with a GIC. And another pro is that these are liquid. You can trade in and out of them on a daily basis. So you can put this in for 3 months and decide, hey, there's an opportunity to buy another stock. I'm going to sell this position, collect my interest along the way, and then move that money into the stock market. So instead of going into a GIC where you have to lock something in for a year, 3 years, 5 years, etc., this is a very liquid way to get almost a 5% yield. Now, it does have some other implications when you look at it, holding it in a non-registered account, and we'll get to that in a little bit. So another ticker to take a look at is HISA.NE. It trades on the NEO exchange. And what you can start to notice by looking at the third example is that they all trade for about $50. This one in comparison has about a 4.74% income or yield on the ETF, and then you're looking at a 0.15 MER. So another one to take a look at. We'll take a look, jump over to a purpose product. This one, PSA.TO, paying about a 4.59, and the MER is probably about 0.17. So another one to take a look at when you're looking to add one of these to your portfolio. We'll jump over here now to compare some of the funds that we've just looked over in Yahoo Finance, and we can see that they all relatively perform the same. The stock price tends to go up towards the record date, and then from there subsequently people sell off. So people are moving in when it's time to get the yield and then moving that capital out, and we can see that the performance is all relatively the same. So that group of of products is definitely all comparable. It just depends on what suits your needs best, whether it's the yield on it or whether it's the MER that you're paying. Now, we alluded to it before in terms of holding this in a registered account, aka an RRSP or a TFSA, or holding it in a non-registered account. Now, it's important to note that when you're holding this in a non-registered account, this yield is considered as interest income. So you're paying effectively a higher tax rate than you would if it was capital gains or if it was an actual dividend income. So take that into consideration when you're looking to hold this in a non-reg or a reg account. But if you still like this and you want to hold it in a non-reg account, but you don't need the yield, you don't need the monthly payouts, I have a product that you may find interesting, and that is HSAV, HSAV. It's a Horizons product. And what makes this one a little bit different is that it does not pay a distribution. Instead, it adds it into the fund and you'll actually see capital growth in the stock. So instead of paying that yield out, effectively they add it onto the net asset value. And when we take a look at the chart here, the performance is an upward trend. Over the past year, it's done about 3 to 4% in gains. And that's important to take into consideration because a lot of these ETFs that we covered before have only recently started paying these higher yields. So the performance of the other one has been around the 2 to 3% over the past year. So if you're not looking for the income and you'd rather see the shares appreciate or the shares grow in value, and when you sell them, you only have to pay capital gains outside of the registered accounts, then this may be a product for you because you will take part, you will benefit of a rising interest rate environment, especially the one that we're in today. Again, just to recap, you have liquidity here. You can move in and out of these positions to capture on a short-term basis or hold your cash in these knowing that they're safe in a high interest rate account that are normally held with the big 6 banks. Additionally, we do have the fact that you are paying an MER, but when you look at what these interest rates are, they're better than what you and I can be getting in the bank. So that's where I really like these in the long run. The tax efficiencies are definitely good if you hold them in a registered account, but if you have to hold them in a non-reg and you don't need the income, take a look at that HSAV one. And then obviously you don't have the CDIC insurance as if you would in a savings account. But I think that with the way the world is working right now in the big 6 banks in Canada, I do not think that this is a worry for you. And especially if interest rates in the Bank of Canada continue to move higher, then realistically, these yields will continue to move higher as well. If we see these rates start to drop, the Bank of Canada start to ease, then these two will as well. So make sure you're keeping an eye on what the interest rates are doing. Another thing that is kind of a letdown is the banks that you trade with, the TDs, the BMOs. We can see here that the big banks have blocked these ETFs because obviously they want you to bank with them. But if you are a QUESTRADE member, and if you aren't, check the link down in the description, or you have Wealthsimple, they do allow these purchases. If you're with a big bank, I apologize for building up your hopes for nothing. Hopefully this changes soon, but it seems like it's been in this kind of limbo for a long period of time. So I hope you enjoyed the video. If you're still here with me, make sure to let me know down below what your thoughts are. And if you haven't already, please consider hitting that subscribe button and turning that notification bell on. I appreciate all of your support. I hope you have a great week in the markets. Happy trading.